Well, greetings to you. I return yet again to banking and gold because things are now moving really quite quickly. And there's a number of points I just want to cover. First, as I did a little video yesterday, banks are beginning to not let you spend as you wish, and particularly hostile they are to you purchasing gold sovereigns or gold Britannias because they fear a run on their miserable little bank. They know that paper money in their insolvent little bank is dodgy, and people are beginning to realise just how dodgy it is, and they're trying to buy gold through the various bullion companies. And my website tells you how to do that, all about that for those who wish to visit it. Up to you. And they're stopping those transactions, which is the first step, as I foresaw some years ago now, when I wrote the first edition of my book, The Magic of Banking, because explaining how banking works, or perhaps how banking doesn't work. So we're now living in troubled times, and they're going to get worse. Banks are going down sooner or later, and it looks like sooner. Paper currency is under pressure, and the way to protect yourself, of course, particularly, is in gold, in coins, in your hand, in specie. Don't trust anybody else much to hold it for you unless it's in a safe deposit box, independent of banks and independent of the government. I've gone all through that before. I don't want to revisit that. Now, a lot of you have asked me, when's a good time to buy gold? Well, I keep on trying to answer this. First of all, there is no good time to buy gold particularly. It's a long-term strategic hold. And some of the bullion banks at the moment are saying things like, wow, if you'd invested in gold X years ago, you would have doubled your money. So, for example, if you'd invested in gold 7 years ago, by today you would have doubled your money. And life isn't quite that simple. I wish it was. It comes and it goes. The price can dither about. It's a commodity. It's a global commodity, gold. And sometimes it's bullish and sometimes it's bearish. But over the long time, it's bullish. And I've been adding to my portfolio since gold was about $300, or £300, I should say, because I'm speaking today to sterling investors almost certainly. £300 round about 20 years ago, a bit more than 20 years ago, and adding to it at that price. And it goes up and it goes down. It jogs along. And from 1981, in the days of the Thatcher years, 81 to 91, 95 even, 15, 16, 17 years, the price of gold hardly moved at all in sterling terms. It didn't move at all. It's a long period, actually, of drifting about. But don't forget, there wasn't inflation, there wasn't a banking crisis, and there wasn't anything that drives gold as a safe haven, particularly going on in the 90s, 80s, and the first half of the 1990s. So you've got to bear that in mind. Now we are beginning to realise that we are facing a crisis, all sorts of crises, and particularly the demise of banks, so on and so forth, and of course inflation now rampant. So these are the things that you have to take into consideration. So is there a good time to buy gold? Well, not really. There's no good or bad time because you're going to buy it. You're not going to sell it. You're not going to trade it by Christmas or next Easter. You're going to buy it, stash it away and forget about it. As I did in all those years, I was buying it at £500 an ounce, then £900 an ounce for a quite long period, then £1,500. And so it goes on. You accumulate it, you stuff it away, and you forget about it. There's another dynamic, of course, that comes to this, and it's the value of sterling against the dollar because it is traded globally at the moment in dollars. The price is fixed in dollars for gold. And I've seen sterling go in about 1985 when I just my first year of my marriage, I think, and I just got back from California, and I'd seen that almost pound sterling go to par with the dollar. And maybe, I can't remember now, but maybe 10 or 12 or 13 years later, it went nearly to $2. And then it went back nearly to par again just about a year or so ago, and it's gone back now to 128. So what you've actually seen is a demise of sterling in the long term against the Yankee dollar. The Yankee dollar is in its own demise. So a 1971 dollar when Nixon closed the gold window. He came off the gold standard. Now you need $7 to pay for what $1 would have bought you in 1971. So paper money just degrades. You know all this. That's why you're a subscriber. You know all this, and if you're a new subscriber, welcome. You may not know this, but this is how it goes. It swings and roundabouts, and it's a long-term hold. So be very steady away when you see bullion companies go, wow, 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 this is quick, get rich quick. If you'd done this 7 years ago, you'd have doubled your money. Life isn't quite like that, but we have seen in the last 7 or 8 years a very serious bull run in gold. And that's because of a degradation in paper money rather than increase in the price of gold. It's degradation in the price of gold because paper money is going down. And that's what you've got to bear in mind. Visit the website. There's so much on it. There's interviews, there's charts. And of course, my book, The Magic of Banking, which is a second edition, which you can get on Kindle, is just as good and as strong as it ever was. I just wish our politicians would read it so they could understand banking and money. They won't read it. Oh, most of them don't read it and they don't understand. Don't think when you look at the Chancellor, Mr. Hunt, he knows anything about banking and money. He doesn't. He hasn't a clue. None of them have. Not even the Treasury have a clue. Financial journalists in the main are utterly hopeless, with one or two noble exceptions, perhaps Liam Halligan and Alistair Heath, but the rest of them are dismally ignorant of how it all works. But this is something you've got to sort out yourself. Nobody can do it for you. You have to sit down and say, I'm a reasonably professional, successful professional man. How can I protect money? How can I protect what little wealth I've been able to secure after taxation so that I have something in my old age which is actually worth something and not silly paper money? And how can I avoid banks controlling what I spend my money on and indeed insolvent banks who probably go down and take my money with it if I'm not careful? It's all there, but don't wait much longer. Don't wait much longer because it's happening. And there has been a trail off in the gold price in sterling in the last 12 months. So there are still buying opportunities there. They will not last forever. It could drift about until Christmas. It could drift about until, but the general trend is up. Don't miss the boat. As most of you know, my work is very heavily independently research based. And I get my information from all over the world. It would help if you press the subscribe button and the little bell next to it, because the more subscribers I have, the more likely it is that international independent research institutes will share their material with me. It's most helpful, and then of course I'll automatically share it with you. So, surprise, won't cost you anything. Thank you very much.